Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what happened today on a pretty massive reversal day off of the jobs data. We talked about this yesterday, how we can potentially get a reversal, especially off something like the jobs data coming out this morning, right? And that's exactly what we got. Came up pretty much exactly to the level I talked about, right? That 198 to 204-ish range. Pretty much right in there, actually closing within it, which is not too bad. But yeah, let's talk about this. Let's figure out what does this mean moving forward and what do I expect to happen next. As per usual, this is not financial advice. I am not a financial advisor. If you enjoy the video, don't forget to hit that like button. It does help a lot, of course. I appreciate that. And of course, if you enjoy my insight, definitely, consider joining the members section on YouTube. The link is below in the description of the video. Just $3 a month. You get access to all my thoughts pretty much every single day. The market is open on Tesla and sometimes other stocks as well. I personally actually started trading NVIDIA a lot more right now. I think NVIDIA actually looks probably like really good. Not really good, but I like NVIDIA right now. I'm really liking NVIDIA. I love the options on it. The volatility is great. Just a really damn good stock to trade. I'm really enjoying it. Anyways, it's not an NVIDIA video. Anyway, jumping to Tesla. Closing the day up a beautiful 3.7%, closing at 198.84, which compared to the market, unfortunately, is actually an underperformance. A pretty, I wouldn't say substantial underperformance, but definitely an underperformance, right? QQQ is up 3%. Like, that's a pretty massive run on the QQQ today. Huge run. 3% on the QQQ is going up 2 and 3% every single day, or up and down 2 and 3%, like pretty much every day this week, it feels like, which is pretty wild. But nonetheless, beautiful run up. So Tesla definitely underperforming. Tesla should be up at least like minimum 5% off that. Really, pretty much what NVIDIA is up is what Tesla should be up today. So definitely an underperformance there, right? But the good thing and the good news, in my opinion, is the fact that we're getting a pretty nice pattern being set up on Tesla here that should make things a little bit more clear moving forward and a little bit easier moving forward as well. And what is that? Well, we're getting pretty much inside day candles, right? You can argue the fact that the last 3 days, including today, have been pretty much inside day candles. Yesterday, we definitely broke down below it, but honestly, just makes things simple. We'll look at today and yesterday's candle, right? Yesterday's candle, massive red candle. Today we got an inside day candle traded almost to perfection within the range of yesterday's candle. Beautiful stuff. Now, really, it just comes down to a pretty simple process here, right? You wait for this to break. You wait for one of these levels to break. One way to look at it, if you want to be try to be trigger happy about it, I guess, if that makes sense, is you pretty much wait. If you break above today's high or today's low, you probably will continue tomorrow. You probably will continue in that respective direction. So for instance, today's high was what? Today's high was about $200.70, breaking above 270 cents. You can definitely make a case that we're going even further higher on the bright side. On the reverse side, the low of 192 pretty much, break the below that, well, we're probably heading lower into the 180s, right? And that's kind of how you can look at it, right? That's most likely the way it'll play out. So I'm personally going to be a little bit more cautious about it. What I'm going to be looking for is I want to see a break above about 203.5 to 204 at least. And I want to see a breakdown below about 191.5-ish. I'll be looking at those levels. If one of these levels breaks, most likely we will continue in that direction. It's a little bit safer in my opinion. Now, obviously, I want to make things very clear here. The reason that I'm doing that is because on top of breaking this larger candle, which in my opinion has a bit more conviction behind it if we break that level, so again, about 203.5 to 204, we'll also be breaking back above this 200-day moving average, which has rejected us almost to perfection 3 days in a row now, not including today, right? So that's another reason why I'd want to be breaking above that level. Now, granted, if we break above that level, we'll also get back into this trend line, which will be a very good sign as well. So I definitely want to start closing above this trend line, also pretty much above 204. And then we'll head our way into this gap fill sitting at around 207. Breaking above that will be even further confirmation. So those are kind of the main levels I'm looking for the upside and even to the downside, right? If we break below here, I definitely expect us to come back down to around this volume profile area, somewhere around the mid 180s. I definitely expect that. But with that being said, I also believe that should be a pretty damn good area of support to as low as the high 170s, I'll say, where the volume profile really kicks in, because that's where that rough 0.618 Fibonacci level is. And below that we have, of course, that 786 or something like that. I can't remember. Let me double check. Yeah, 786 Fibonacci level below that, which is going to be sitting at somewhere around 170-ish as well. So those, in my opinion, are the main levels to look for upside and downside, right? Again, if we do break above this gap fill at 207 and start closing candles, the next level to look for to break will be about 215. If we break above about 215, that most likely will break us out of this downward channel / potential handle. Remember, don't forget, we still have that cup and handle pattern. I see some people starting to talk about it. If you go back to my video on I don't know, what was it, July 5th or something like that, pretty much all the way up here, or July 10th, I think, actually, yeah, up here. You can go back to the video and you can watch me talk about this cup and handle pattern. I pretty much predicted something like this happening, right? And then we have the handle, of course, which is what we're forming right now. And that's exactly what's happening, right? That's exactly what's happening. And, you can still make the argument, the fact that if we break above 215, well, that's going to be most likely a break out of the handle. And that will be very bullish moving upwards. I think that'll at the very least bring us back up to about the 250s-ish. And breaking above 265 to 270 will be very bullish. And we most likely will head to all-time highs over the next several months. That's the overall projection I see moving forward. But of course, there's a lot of ifs here, right? There's a lot of ifs, a lot of levels to still breach for one way or the other. Again, if we break below, the levels, like I said, we have the volume profile in the low mid-ish 180s, we'll say. We have a much higher volume profile in the mid 170s, breaking below 170 to like 168-ish. Most likely will make us come down to about the low 150s to retest this green trend line that we have bounced substantially off of before. So that's also a real possibility. So in all honesty, it just really comes down to let the levels decide for you. Now, moving over to the indicators over here, you can see, right? MACD is still bearish. It's starting to finally make some higher lows, which is good, but it's still overall bearish, still pointing straight down. RSI is finally trying to curl up a little bit here, but I wouldn't put too much weight into RSI. Honestly, I don't really care about RSI other than divergences or being overbought or oversold. It dancing around in the center like this, I usually don't really care too much about that. It doesn't mean much to me at all. I look for extremes in the RSI. Not really seeing too much right now. Nothing really standing out to me, to be completely honest. On the bright side, though, the daily stochastic showing some life here. Crossed over, it's holding longer than the previous false crossover, so that's a potential good sign. So as long as we don't just completely collapse coming, maybe even tomorrow, there is potential here. There is definitely some potential for a reversal here, right? We have the BX trender finally making a higher low, barely, not super convincing, I'm not gonna lie, but a higher low nonetheless. The one thing I would say is a little bit concerning is the volume, right? The volume today on this pump, right? The market in general today on this volume pumping up pretty aggressively has been pretty lackluster, right? It's been pretty much moving upwards overall on just decreasing volume. So not really sure how I feel about that, right? We're definitely pumping on some low volume, right? Tesla also, like the lowest volume we've seen in quite some time, even lower than what is this, July 31st, right? I'm pretty sure. Yeah, about the same, if not slightly lower than July 31st. So very, very low volume on today's almost 4% pump. So, definitely some concerning signs there, in my opinion, that, are making me kind of not really rush to any, big positions or anything like that, right? Big bullish or bearish positions, because it feels like a massive move is brewing with this declining volume. Once we finally pick a direction off of this, I do believe that the volume should substantially increase. Whether that's going to be up or down, well, that's still, up for debate, right? But in my opinion, once we breach one of those levels I talked about, so pretty much about 204-ish to pretty much about 191-ish, that's most likely going to be where the volume is going to start potentially picking up once we really pick that direction. At least that's what I personally believe. I could be completely wrong. I could be an absolute lunatic. Who knows, right? But that's what I'm currently observing, and that's what I currently predict moving forward. Now, going over to the 1 hour chart very quickly here, right? We can look at the stochastic. You can see the stochastic did cross bullish on this hammer candle pretty much in the first hour of the day. And then, of course, we ended up slowly rallying upwards towards the rest of the day as well. Actually ended up closing back above 198, which is not too bad, right? That's definitely better than not, in my opinion. If we close back below 198, that definitely would have been even more concerning, but we closed above it. So that's, a nice little thumbs up for the bulls, in my opinion. But ultimately, stochastic, again, every time it gets up here, we ended up crossing back down, then it gets back down here, we ended up crossing, we rally. So the point I'm trying to make here is the stochastic, it went into oversold territories. We finally saw that cross and it rallied. Fantastic. Now we're getting back up to, overbought territories. Do we get a cross back down tomorrow? It's possible. So just keep that in mind, right? Definitely want to watch out for that potential situation happening as well. But all in all, Tesla just really, again, it just requires patience. It definitely just requires some patience, right? I think a direction should be chosen pretty damn soon. Could be as early as tomorrow. All it takes is just a breach of one of those levels. And I think once one of those levels breaches, we should get a pretty decent move in that respective direction moving forward. So again, there are some signs that I do like to see for the bullish perspective. I like the stochastic here. I like the fact that it's cross bullish. I like the fact that it's oversold and cross bullish. So there are some signs for the bulls to, play off of here. There are some potentials, but I don't like the fact that we're underperforming the market. We're still below this trend line. We're still below the 200-day moving average, right? The market has pretty much come up to nearly gap fill these gaps that are left behind on the massive drop downs. Tesla, not as close, right? Definitely not as close as the market is. The market, if Tesla were to follow the market, Tesla would be pretty much around 206 right now, in my opinion, right? If Tesla really just followed the market properly off of this, little rally after this massive fall. So, it's definitely underperforming the market, which is unfortunate, but it is what it is. Now, one thing I want to talk about in the market sense, the SPY QQQ really quickly is this. Now, obviously, the second you look at this, the first thing I see right away is a bear flag, right? This, I mean, this just looks like a bear flag, right? You can just easily make an argument that this is just, well, pretty much a bear flag. You can, put it like this and then put it like this. Bam, you have a bear flag. I mean, I'll even put it here. Let's just draw it out so you can take a look at it, right? Bam. Right, pretty much looks like a bear flag. Let's be honest here. That looks pretty textbook of a bear flag. So that is concerning. But one thing that's also potentially concerning for the market off these bounces on lower volume, I might add, is the fact that if you take the Fibonacci right before we ended up having that massive drop, so you can argue the fact that this is that swing high to what arguably now is the swing low. You can see we're pretty much heading up right up to that 0.5 Fibonacci level on the SPY. Pretty much the exact same situation happening on QQQ. Take the Fibonacci from up here all the way to down here. And you can see pretty much almost to perfection at 0.5 Fibonacci level. Could go even higher. We still have the 618 above us at around 455. I can definitely see the market rallying back up to about 455 on QQQ, for instance. SPY will be somewhere around 537 roughly, right? Can definitely see that. But keep in mind, those levels are pretty crucial because what do we have at these levels? Well, that's the level that we have rejected at several times before and have a lot of support as well. That's where that 618 level is. Where is it on the QQQ? 618 is right here. And what do we have several wicks over here that, kind of supported us, right? Well, we ended up getting some bounces off of these levels until we finally broke down. And that's exactly where that 618 level is. So wouldn't be surprised to see the market get a bit of a further rally, even as early as tomorrow, honestly. But really, for Tesla's sake, at least, I would just be looking at those levels that I just mentioned. Once one of them breaches, in my opinion, we should get a decent move in that respective direction. And that's kind of what I'll be waiting for on Tesla personally, right? And that's just kind of what I'm doing right now. I am starting to enter NVIDIA here. I have already entered AMD yesterday at close at like 130. So I'm holding my AMD still. I'm very happy with that. NVIDIA, I started, nibbling back in. I still have cash record puts lower. So if we drop, I'm very happy to continue adding. But NVIDIA is looking pretty solid. All NVIDIA needs to do, in my opinion, is break above, in my opinion, 107 to 109. Now, this is another thing to look at for Tesla, right? Now, ever since this, drawdown started back up since about, 265 to 70, what has happened, right? We've been making lower lows, lower highs, right? Every single time. So watch, for instance, it started up here. What do we do? It came down. Cool. Came up here. Cool. Came down. Lower low, lower high, lower low, potentially a lower high, right? What does Tesla want to do in order to really break this trend? In my opinion, at the very least, in my opinion, right? At the very least, let me go ahead and actually do this quickly. It looks something like this, right? Boom. Now, at the very least, Tesla wants to start potentially breaking this 204 level. Breaking this 204 level can start, you can start making an argument that the trend has shifted and this is no longer going to be a lower high. But to really get confidence, for Tesla to really rip out of here, to really get some confidence, right? Because all I think is if we break 204 and especially 207, we just head to 215. Really important though, in my opinion, is to break 215 because then we breach this lower low, which is a good sign. And even better would be to break above 234. Unfortunately, that's obviously quite a ways away, right? I'm sure people don't want to be adding at 234 when you can technically add all the way over down here at like $200 per share, for instance, right? It's quite a much, it's decently higher than where we are right now. But that to me would just be a trend change. And if we do happen to do that, any dips from there will be also viable because we have officially broken this downtrend. Anyway, that's just kind of how I look at it overall right now moving forward. So all that being said and done, ladies and gentlemen, if you enjoyed, don't forget to hit that like button, and I'll see you for the next one. Peace.